Hey everybody, you got Justin here with Integrated Senior Marketing, and today we're going to talk about how to maximize your long term care business. So, we're going to go over the agenda real quick. We're going to cover what is long term care, do a side by side analysis of traditional versus asset based long term care, give you the tips and tricks of the trade so that way you know the costs of care on a national average. We're going to go over a case study, talk about any potential tax advantages, and go over the four financial buckets, which is the key to selling tons and tons of long term care. But before we get started, we got a little bit of housekeeping information. So, this is a training video designed for life and health insurance agents. This video is not an attempt to prospect or sell life insurance to the general public, and the information discussed in this video is valid under laws and product availability as of the date of this recording, February 13th, 2019. Now that that's out of the way, let's dive right on in talking about what is long-term care. Long-term care basically services designed to meet a person's health and physical and personal care needs over an extended or short-term period of time to help them live as independently and safely as they can when they can't perform everyday activities on their own. Now, this can be done either at home, in an adult daycare, or in a nursing home. And you have to qualify for long term care when you cannot do two activities of daily living. And we'll talk a little bit about what those ADLs are, as well as some of the other qualifications to get onto long term care. So, as I mentioned, your activities of daily living, typically when you can't do one, you can't do another. So, they kind of come in groups, and we'll go over those real quick. You can't bathe yourself, you can't dress yourself, you can't groom and take care of yourself, you can't use the bathroom on your own, or you have trouble using the bathroom. You can't eat, or you can't transfer, which is just moving from table to chair, or bed to chair, or chair to bed, something like that. But an automatic guarantee to qualify for long term care is a severe cognitive impairment like Alzheimer's or dementia. The U.S. Department of Health and Human Services mentions that about 70% of people turning 65 are going to need long term care services at some point. And this is the important takeaway here. Medicare and private health insurance programs do not pay for the majority of long term care. Let me repeat that again. Medicare and private health insurance does not pay for the majority of long term care, which is why, as you're talking with your clients, you need to help them come up with this plan so that way they get the care that they need. You've probably heard of traditional long-term care, but what I'm going to show you is more asset-based long-term care, but let's talk about those differences. Traditional long-term care is offered through health insurance, which means that rates are not guaranteed and they can go up whenever the insurer decides to raise the rates. And there's little flexibility when the policy is paid up, even if given the option. Now, on the other hand, you have your asset-based long-term care, which is offered through life insurance or an annuity, so the client can establish when the policy is paid up if they so choose to. There is an inflation protection provided with the asset-based long-term care, as well as lifetime long-term care benefits, which you do not get on the traditional side. And because it's offered through life insurance or an annuity, the rates are guaranteed to never go up. So why do we here at Integrated Senior Marketing suggest the asset-based long-term care for your clients? Like I mentioned, it's offered through life insurance or an annuity, which means there's a death benefit if the long-term care benefits are not used. There's cash value accumulation. Oftentimes it's a joint policy, so that means there's joint underwriting. And you get this lifetime continuation of benefits rider that you don't ever see. Again, the important thing is that rates are guaranteed, which for a lot of people means stability, and that's something that a lot of clients are really looking at. So you've gotten everybody at the table and you're sitting down trying to talk about long-term care costs and evaluating their needs, and what we're going to pay attention to in this training video is the cost per month. A semi-private room in a nursing home is about $6,800 a month, $7,700 on the other hand for a private room, about $3,600 per month to have to be in an assisted living facility. If you have somebody come to your house, you're looking between $20 and $21 an hour that you're paying them. Or if you go to an adult daycare center, $68 a day, or roughly $2,000 to $2,100 a month. Now, you need to have that information ready to go, because I promise you, your clients are going to ask you about that all the time, because this is a lot of money that they're going to potentially have to pay either for the long-term care, or they're going to have to pay it out of pocket. So you need to be, you need to know this information backwards and forwards. And this is a national average. Some states are much more expensive than this and some states are lower. You as the advisor needs to pay attention to that, because if you're quoting them at $6,800 a month and you're in a state where it costs $14,000 a month, you've just done your client a massive disservice. So this is, just as a reminder, a national average. So let's take a look at a scenario here. You have a husband and wife that we're going to try and insure together. Husband is 59, the wife is 56. Neither of them uses tobacco. They have a combined household income of $350,000, and the husband owns a successful C corporation. That's important. We'll get to it in a minute. They each are going to want a private room in a nursing home, and because they're a little bit younger, they want to plan for inflation, so they're going to recommend $9,000 a month each in long-term care benefits. And that's, like I mentioned, going to provide that inflation protection before the continuation of benefits rider kicks in, as well as if a spouse goes on long-term care claim, they wanted a waiver of premium. So you call us here at the Integrated Senior Marketing Office and we present you with this quote. Talks about everything that they want, $9,000 a month each, unlimited lifetime continuation of long-term care benefits. There is that death benefit, and they're insured together. But the thing that your client is going to see is that $18,254 per year premium. Now, I set this up on a 20 pay. If you decide and the client decides that they want to pay everything every year, they can do that. If they want to do a 10 pay, they could do that as well. We'll do a really product-focused webinar later, but for today's purposes, we've just set this up as a 20 pay. Again, your client is looking at that $18,254 mark, but we're going to break this down even further. Again, you have the $9,000 a month each in long-term care benefits. If you look under the product features section here on the bottom left of your screen, you see again the premiums are guaranteed to never go up. How are we coming up with the amount of death benefit, which is $300,000 if you remember? There's guaranteed cash accumulation in the policy as well as the waiver of premium. And for the life insurance, that only costs $10,152. That continuation of benefits rider, again set up as a 20 pay, $8,102, unlimited benefit balance, lifetime benefits, and there is that 3% compound inflation. I mentioned that the husband owns a C Corp. There are tax advantages for the C Corp, and it's purely based on that long-term care insurance, which is the continuation of benefits data. As a C Corp, the business can deduct 100% of the long-term care insurance. That's phenomenal for your clients, for your owners of the businesses, for non-owners. So this is something else that if there's a really important key man or you want to run employee benefits, long-term care is something else that can work tremendously for your client. Now, assuming there isn't a C Corp in place, we're going to talk about the 4 financial buckets. This here is the secret to making your long-term care sales, skyrocket. Every single penny that your clients earns goes into one or more of these 4 buckets. Let's talk about them. Starting from the left, going to the right, you have your paycheck bucket. These are things that you are going to have to spend money on. your groceries, your utilities, your mortgage, all that other fun stuff. Then immediately to its right is the paycheck bucket. This is the bucket where you put money in for you and your family to just have fun. This is what makes you you. Next to that, we have the legacy bucket, which is if you want to leave a gift, if you want to leave money to your family, that money goes there. And lastly, over on the far right, you have the emergency bucket, which you put in place for long-term care needs. The problem is that emergency bucket is hungry once you go on claim, so it's going to start eating what's closest to it. It's going to start eating the legacy. Once that legacy bucket's eaten up and all the money in there is gone, it's going to start taking away from the play money. Once that happens, you're going to have to start cutting way back on your expenses if you are self-insuring your long-term care. Working with us, though, we're going to fix those problems. So the first thing that we're going to do, we're going to fill that emergency bucket up today by getting this long-term care coverage. We're not going to worry so much about the paychecks, and you're not going to have to worry about cutting back some of those expenses. You can still leave a gift, and you can maximize your play account. These buckets here are going to open the door to tons and tons and tons of cross-selling opportunities down the road. With a long-term care sale, it's expensive. You saw the numbers. I wouldn't jump right into that in the same day or even the same appointment. But using this multiple bucket system, you can find all sorts of sales down the road. So let's recap here. The first thing that you're going to need to do with your client is to determine the long-term care wants and needs. You're going to provide them the long-term care solution, which was that quote that I showed you. If there are any tax advantages, I showed you C Corp. There are tax advantages for corporations. They're just not as great as the C Corp. And then you move over into the 4 buckets if they can't get the company to pay for it. But the main takeaway here is it doesn't really matter what type of long-term care plan that you and your clients come up with. It only matters that the long-term care policy is in force when the client needs it and lasts the entire duration of the long-term care claim. And going back to that asset-based care stuff, if the client doesn't need it, the beneficiary still gets that lump sum of cash at the death of the insured. So if you like what you saw and you have any questions, feel free to reach out to us at Integrated Senior Marketing. You got the leadership team here. You got Randy and Justin and with our emails. Or if you want more information about joining the team or getting information about getting the product, give us a call at 888-302-4443. We look forward to hearing from you and offering more training down the road. We'll talk to you later.